pleasant good evening to all of our clients, shareholders, investors, members of the public. Welcome to the Barita Town Hall. I am Kerry Bayliss, and I'm the Vice President for Strategic Business Development and Investor Relations here at Barita, and it's my pleasure to be your moderator this evening. I'd like to thank you so much for joining us. We're absolutely delighted to be with you this evening are here with me as well. So I'd like to introduce Therese Kettle, our Senior Vice President, Justin Burke, Assistant Manager, and our Muirhead, Senior Manager, all from our investment banking team. Now, our objective today is to provide a detailed overview of the Barita bond. We'll discuss the various features and tenures of the offer and all the reasons why you should have the bond in your portfolio. And then, of course, how to participate. So this is also our opportunity to answer your questions live and direct. And at the end of the presentation, we will open for question and answers. Although you can ask the questions at any time during the course of the presentation by entering them into the chat box located on your screens. Again, I am the moderator for today's call, so I'd ask you to ensure that you send them directly to me, and we'll get them, we'll see them, and we will happily answer them all at the end of the presentation. So ladies and gentlemen, it is now time for the reason that we're all here this evening. So without further ado, I'll hand over to Therese, who will start our presentation on the Barita bond offer.
So thank you very much, Kerry. And, as a part of our overall mandate here at Barita Investments Limited, we are big on investor education, right? It's very important that we take the time for you to understand exactly what it is that you're investing in. And so it's very important, for us to have this conversation here today. Now, we're talking about the Barita bond. What is the Barita bond? Who is Barita Investments Limited? We're going to talk about the Barita difference. We're going to talk about the unparalleled financial performance of Barita Investments Limited. Key details on the offer. Is very important that you understand, why is it that, you should be investing in Barita Investments Limited. And last but by no means least, we're going to talk about why we believe that now is the right time for you to invest in the Barita bond. All right, so our usual disclaimers in relation to this presentation, right? So we are representatives of Barita Investments Limited, and we're here today talking about Barita Investments Limited. So we want you to feel free to reach out to your accountant, your attorney at law, an independent financial advisor, or any other professional in relation to this offer. Right? So it's very important for us to understand exactly what it is that we are going to be investing in, and that you get the independent information as it relates to the offer. All right, so we're going to start off. Who is Barita Investments Limited? So Barita Investments Limited is a publicly traded company on the Jamaica Stock Exchange. So we have the distinction of being owned by Cornerstone Financial Holdings Limited, 75%. Barita was founded by a woman, Rita Humphreys Lewin, in 1977, and we have the distinction of being one of the first and one of the oldest stock brokerage firms in Jamaica. So Barita is a full-service investment bank, brokerage, and asset management firm serving its clients from our offices in Kingston, Mandeville, and Montego Bay. As at September 30th, 2024, we had a total of $405 billion of assets under management. So on the graph, what it is that you're seeing here today, you're seeing the trajectory of Barita Investments Limited, right? So Barita was incorporated in 1977. Barita was listed on the Jamaica Stock Exchange in 2010. In 2018, July, Cornerstone acquired 75% of Barita Investments Limited. In 2019, we did not just one, but two oversubscribed rights issues. In 2020, during the pandemic, we did the largest additional public offer in Jamaica's history. In 2021, we did a second additional public offer despite challenging market conditions. And in 2023, we did a private placement, a bond in 2023. So a little bit more about Barita, right? Because as a financial institution, we're big on democratizing wealth, so you have to understand exactly who it is that you're investing in. So we're teaching you about who is the issuer. So the corporate structure of Barita Investments Limited, as we spoke about it earlier, Barita is owned 75% by Cornerstone Financial Holdings Limited. Barita in turn owns 100% of Barita Unit Trust Management Company Limited. And we also have a 20% stake, and we have Dermont Trading Company as an associated entity, of which we own 20% of that publicly listed company. Now, it's very important, right, listeners, viewers today, to understand the financial services industry, and you have to understand, you know, in order for you to get that certain level of trust, you need to understand how is Barita regulated, right? And how is it that we're licensed? So we are regulated by the Financial Services Commission, and we have a securities dealer's license, and because of that, we answer to the FSC. In addition to that, we also have a cambio. A lot of people don't know that Barita Investments Limited has one of the largest cambios in Jamaica, right? So because of that, we are a primary dealer, and because of that, we also answer to the Bank of Jamaica. In addition to that, we are listed on the Jamaica Stock Exchange, so therefore we follow the guidelines and strictures of the Jamaica Stock Exchange. Now, you are investing, and we're hoping by the end of this presentation, you are going to go to barita.com/bond. You're going to read the prospectus, and you're going to decide to invest in Barita Investments Limited. But what do we do? What are some of the products and services that we offer here at Barita Investments Limited? So we're going to go through some of them so that you can understand what it is that you're investing in. So remember, this is a part of the investor education, teaching you about who it is that you're investing in. So when we look on it, we have our investment banking unit, and the investment banking unit at Barita Investments Limited was started in December 2018, and we consider ourselves to be one of the newer kids on the block as it relates to investment banking services. What do we do in investment banking? Simply put, we raise capital and we provide strategic advice to our clients, right? And since our inception in December 2018, we would have raised in excess of $130 billion in capital, debt, and or equity for local, regional, and international players. On the wealth management side of things, we would have been around for over 40 years, and it's very important that viewers and listeners, you get this. Our FX growth portfolio was ranked top in class in 2024 with a return of 27.73%. Our real estate portfolio was primarily and is also ranked top of class in 2024 with a return of 38.14%. Now, on the brokerage side of things, some of the services that we do offer are equity brokerage services, local and international markets. So if you're interested in trading, please come to Barita Investments Limited. On the fixed income brokerage side, we offer government and corporate securities. We also offer repurchase agreements and structured notes. Now, we spoke about it earlier that a lot of people don't know that we have cambio services as a part of our business here at Barita Investments Limited. And what do we offer? We offer spot foreign exchange trading services across US currency, Great Britain pounds, euros, and Canadian dollars. And in 2024, Barita was ranked the second largest cambio based on volumes traded. So we would have traded in excess of 615 million foreign currency in 2024. So if it is that you're looking to trade currency, please come to Barita Investments Limited. Now, moving on to what we term the Barita difference. Why participate in Barita and the Barita bond? Now, it's very important, especially now in the financial services industry. Trust is a big factor, and in order for us to be able to gain that level of trust, we have to show you exactly what it is that we are doing as a financial institution. And some of the things that we believe that make us different from others is that we put a significant amount of focus on risk management and ensuring that we have a proper governance framework in place. In addition to that, we also focus a lot on having adequate capital adequacy and ensuring that we are lower levered than that of our peers, or we're lowly levered. We also ensure that we invest in the people. The people are who drive the business, right? And without the people who can, who make their strong contributions to the business, we are not who it is that we are. Now, over the years, we would have had a successful fundraising track record, and the step diagram that I would have showed you earlier just demonstrates how it is that we would have successfully raised capital over the years. And everything coming together, right? Ensuring that we place a significant amount of emphasis on risk management and having a strong governance culture, ensuring that we focus on having capital adequacy and low leverage, ensuring that we focus on the human capital. Everything comes together and would have helped us to propel us to our financial performance and our unparalleled financial performance that you're going to hear about later on in this presentation. Now, we're going to talk a little bit about the governance framework, right? And the truth of the matter is that we aim to be perfect. We're not where we are, we're not where we want to be right now, but we're putting the measures in place to ensure that we are as best as possible, as robust as possible, a financial institution serving you, our clients, and prospective investors. So post-acquisition, Cornerstone has focused on bolstering Barita's corporate governance framework, and we would have added several board and management level committees, right? And this is not limited to our board investment committee. We would have also implemented our corporate governance and conduct review committee. We would have implemented our management investment committee and our non-financial risk committee. So each one of these committees adds a certain dimension and oversight in terms of how it is that we operate the business. In addition to that, we would have worked very closely with KPMG over the years, right? And this would have really and truly helped us to create the policies, and the policies also evolve with the business. So as the business continues to grow, as the regulatory framework in which we operate changes, the policies and strictures that we operate in also change. Now, moving on to the risk management, right? And we're going to keep it as simple as possible. It's very important that you understand what it is that we're talking about. So Barita's risk appetite framework articulates the amount of risk that we're willing to take to meet our strategic imperatives, right? And this is something that is ongoing. This is something that is looked at, very closely and on a continuous basis. And that's why it is that we have the various risk management committees in place, just to make sure that we're taking the right amount of risk to meet our own strategic imperatives. Now, this is very important, right? Focusing on capital adequacy and our leverage. Now, if you don't get anything else from this presentation here, ladies and gentlemen, we want you to understand how it is that you should always evaluate your financial institutions, right? It's very important that whenever it is that you're looking at a financial institution, when you're doing your own assessment, when you're reviewing the prospectus, when you're having those conversations as to why it is that you should be investing in a financial institution in particular, you understand the capital adequacy ratios. The capital adequacy ratios speak to the financial health of that institution. It ensures that that financial institution, and it shows you whether or not that financial institution has the capacity to withstand any unforeseen shocks that may happen in the financial services industry, right? So whenever it is that you're looking at any institution, and in particular, whenever it is that you're going to be reviewing the prospectus of Barita Investments Limited, look at the capital adequacy ratios. And on screen, you're seeing the capital to risk-weighted assets. And the regulatory minimum there is 10%. Whereas Barita Investments Limited, 24.59%, right? That's very important. So we're above the regulatory minimum. When we look on the capital to total assets, and this is when you look on the balance sheet of your financial institution. If you're looking at the balance sheet of Barita Investments Limited, the regulatory minimum is 6%. Where is Barita Investments Limited? Barita Investments Limited is at 25.39%. What this is showing is that should for whatever reason, COVID happened in 2019 into 2020, and what you want to be able to invest in an entity that can withstand any unforeseen financial pressures or shocks. And this here is showing you that Barita has the capacity to do so multiple times of that which is required from our regulators. Now, moving on to the leverage, right? And the leverage just shows, how much debt a financial institution has at any given point in time. And if you look on the graph from 2018 to 2024, when we look on the leverage compared to other securities dealers and commercial banks, Barita has been consistently below that of other securities dealers and commercial banks, right? So it's very important that, again, the leverage ratio show you that in the event of any unforeseen financial challenges or anything that may come up, can the entity borrow? Yes, it can. And Justin and Awa will go through this aspect of it to show you how much, right, additional debt we can take on and where we will stack up against that of our competitors, right? So you look on it, we're still lowly leveraged in comparison to our competitors. And when we do take on this additional debt, we'll still be lowly leveraged in comparison to that of our competitors. Now, moving on to one of the most important assets in any institution, right? Our investment in our human capital. Now, over the years, Barita Investments Limited would have been very deliberate in terms of its approach to ensuring that we would have bolstered the human capital within the business, right? It's very important that you understand this and what it is that we have been doing as a financial institution. We would have been ensuring that we're getting the right human capital to support the growth and the strategic imperative of the business. So Barita Investments Limited is headed by Mr. Ramon Small Ferguson. He's our CEO, and he's ably supported by Sonia Owens, Richardo Williams, Anne-Marie Walker-Cato, Ian Anderson, Jeffrey Romans, Sarah Ying Henriquez, Dave Dixon, Sansia Thompson, Kerry Bayliss, and Lerum Palmer. Each one of these individuals have several years of experience and their teams in their respective fields and would have contributed thus far and will continue to contribute to the success and the unparalleled financial performance of Barita Investments Limited. I'll now hand over to Justin Burke, who will walk us through Barita's fundraising track record and Barita's unparalleled financial performance.
All right, thanks, Therese. So just going through Barita's fundraising track record really quickly. So Therese touched on this at the top of the presentation. We have a very strong track record of raising funds on the market, particularly shareholders' equity or permanent capital. So what you're seeing on the screen right now is just Alright, so yeah, what you're seeing on the screen right now is just the different fundraising initiatives that we have done between 2019 and 2021 and the amounts per raise. So overall, between 2019 and 2021, we'd have raised approximately 34.5 billion Jamaican dollars of shareholders' equity. And the significance of this is that, I will talk about it a little bit later, it's just that we're able to bolster our balance sheet with this capital and allow us to increase our assets as, invest in more loans and buy more bonds, etc. So, before we get into Barita specific numbers, it's always good to get an idea of the environment we're operating in, get some context behind the numbers. So, on the screen right now, inflation would have increased to 11.8% as of April 2022. This is local inflation. And since then, the BOJ would have decided to increase its policy rate, right, and have inflation fall. So, as you can see, it worked, moving to 4.4% as at February 2025. So, as I said, the BOJ would have increased its policy rate from 0.5% to about 7% in late 2022. It stayed flat in 2023, then in 2024, they decided to cut its rates. The other three graphs on the screen are really just showing you the interest rate movement in the economy over that same time period, right? 3-month T-bill rate, 6-month T-bill rate, and average CD rate. So what this is showing you is that as the BOJ increases its policy rate, the other interest rates follow suit. It stayed flat in 2023. Then as the BOJ decided to cut its rates, the interest rates also followed. So, the importance of this slide really is just to show you the environment we're operating in, a high interest rate environment. So our liabilities are mostly made out of repos, repurchase agreements, and the repos tend to reprice pretty quickly, almost immediately. As interest rates increase, the cost of our repos also increase. But our assets, the assets that we invest in, they're typically longer dated assets and they're fixed, right, in terms of the rate of interest. So as interest rates increase, our interest expense, automatically increases as well, but our interest income typically stays a bit flat. So what that means is that our net interest income, is negatively impacted. And even though, it would be negatively impacted, as you see in the next couple of slides, we're still able to perform pretty well. So just to give this overview of the performance between 2018 and 2024, net operating revenue would have grown by a compounded annual growth rate of 40.4% between 2018 and 2024. Net profit would have grown by a CAGR of 48% between 2018 and 2024. So when you look at the difference between the growth rate, it's clear that net profit would have grown at a faster pace, right? And what this implies is that our net profit margin would have also improved over that period. And you can think of net profit margin as just a measure of efficiency, right? How efficient are we in turning our revenue into profit? So total assets, total equity, total liabilities all would have grown by a similar pace over that time period. So looking at our balance sheet specifically, if you look at the set of bar graphs to the most right, our total equity would have grown from 3 billion in 2018 to 35 billion in 2024. And this is really a function of the strong track record of fundraising that we've been talking about since the start of the presentation. Total liabilities would have grown from 16 billion in 2018 to 107 billion in 2024. And this is really a function of our growth in our repo book or repurchase agreements. And the combination between the liability growth and equity growth that allowed us to gain a lot of capital to invest in assets, right? That's the nature of our business. So, we'd have been able to invest in more bonds, issue more loans, allow the investment banking team to execute more deals. So that would have culminated in total assets increasing from 19 billion in 2018 to 142 billion in 2024. So looking at our financial performance now in terms of our income statement, our revenue specifically would have grown from 1.3 billion in 2018 to 10 billion in 2024. And again, this is really just a function of our asset growth, allowing us to invest in more assets, allow us to execute more deals. And in turn, our asset growth was, again, driven by our liability growth and our equity growth. Operating expenses would have grown over the time period naturally, but what is important in this slide, in this graph, is just the efficiency ratio. It moved from 58.3% to 50% in 2024. And in this case, a decline is an improvement. What this is really just showing you is, and I'm probably going to be saying this a lot more in the next couple of slides, while we're growing efficiently. We're taking our investors' funds and putting it to work in the business and growing it efficiently. Net profit, similar story, 400 million in 2018. That increased to 3.8 billion in 2024. And as I said at the top of my part of the presentation, that the difference between the growth rate in revenue and profit would have implied an improvement in our net profit margin. As you can see on the graph, net profit margin improved from 27.8% in 2018 to 38.2% in 2024. And again, that shows you that while we're growing the business, we're growing it efficiently. We're taking investors' funds, whether equity or debt, investing it in assets, and growing the business efficiently. So looking at our most recent quarterly performance, which is Q1 2025, which is the quarter ended December 31st, 2024, net operating revenue would have grown year over year by 8.6%. Net profit would have grown year over year by 15%. And again, what this is showing you is that the difference between growth rates, net profit growing at a faster pace than revenue, again, it just shows you that our net profit margin also would have improved over that time period. And again, I'm saying it one more time, shows you that while we're growing efficiently. Total assets would have increased by 8.5% year over year to 140 billion as at the end of the quarter. while total shareholders' equity would have declined slightly by 3.4% year over year to 35.5 billion as at the end of the quarter, and total liabilities would have increased by 13.2% year over year to 104 billion as at the end of the quarter. So now I'm going to pass over the presentation to Awa, who will be taking us through our recent CARICRIS corporate credit rating that we received, the different main terms of the bond, and also the investment risks and merits. Awa.
Thanks, Justin. So I think Justin and Therese would have done an extremely good job at detailing how we've performed. I would say it's our view of ourselves in large part. A lot of this information is public, or all of this information is public. And we've done the assessment to provide to you, how we've done. But it's also important that we have an independent viewpoint of, how we've performed. And as a result of that, we went out and we got a CARICRIS corporate rating. So if you look on screen, you'll notice that you're seeing some credit ratings from CARICRIS. But who is CARICRIS? So CARICRIS is a regional rating agency similar to the more globally known ones like Moody's, Fitch, and S&P. And effectively, CARICRIS did a full-scale review of Barita to then provide some credit ratings, right? So they did their review, and at the end of their review, they provided some ratings. So on screen, you'll see national scale ratings and you'll see regional scale ratings. What are national scale ratings? So effectively, CARICRIS looks at Barita, compares us to local entities in Jamaica, and it says, based on our assessment, if you issue Jamaican dollar bonds, we give those an A+ credit rating. And if you being Barita, issue US dollar or other currency denominated bonds, those are rated A. On a regional scale, this looks at Barita compared to entities regionally. So CARICRIS says if you issue local currency bonds, being Jamaican dollar bonds, from a regional perspective, let's say you're an investor out of Trinidad, then the credit rating is A- for Jamaican dollar bonds, and for US dollar bonds, it's BBB+. Now, what's the takeaway from this? The takeaway is simple. If you are familiar with how credit ratings work, then these are all investment grade credit ratings. Investment grade means that from the rating agency's perspective, these are good ratings, broadly speaking. Now, credit rating agencies also typically provide a rationale for their ratings, which makes sense, right? So CARICRIS provides 5 main rationales for its ratings. The first is our strong market position. So CARICRIS goes into a fair bit of detail about the size of Barita, and size matters, right? So Barita is the second largest cambio by measure of total assets, holding about 14% of all securities dealers' assets in Jamaica, which is quite significant. The second thing CARICRIS speaks about is investments in improving efficiency and customer engagement. In large part, this is really just speaking about our IT implementation. And internally, we refer to this as our new core implementation project. Phase 1 of this was completed in November 2022. And phases 2 and 3 are underway and expected to be completed in 2026. The importance of this is it's basically an IT overhaul, right? And it's expected to improve customer engagement on a wholesale basis, right? So it's going to ensure that we have deeper analysis, enhanced reports, improve our ability to scale, etc. The third thing is support from our parent company, Cornerstone Financial Holdings Limited. Therese touched on this. Cornerstone acquired Barita in 2018, and since then Barita's performance has improved quite significantly, and this has in large part been due to the support from Cornerstone. That support takes many forms. human resource management, for example, legal and compliance functions. So from Chris's point of view, this support enhances Barita as a credit. The third thing, or the fourth thing rather, is good governance, structure, and risk management. Again, Therese touched on this. A lot of work has been done to ensure that we have certain committees at both the board and the management levels. At the board level, a lot is done to ensure that we provide a clear strategy, and that strategy is being worked on continuously. At the management level, it's mostly about ensuring that there's seamless operational efficiency on an everyday basis. And finally, strong capitalization. Both Justin and Therese touched on this. Strong capitalization really relates to our positioning as it relates to our capital. So strength of capital is quite important when it comes on to managing shocks. And of course, naturally, you want a financial institution to have strong capitalization to ensure that it can manage shocks. Now, the information that we've provided thus far is to give you some sense of where we are as a company, because that should enable you to make a decision about whether or not you want to participate in these bonds. But it's also important to know what are the terms of the bonds. So on screen, you'll see that we have 7 tranches of the Barita bond, or 7 options. Tranches 1 and 2 are US dollar unsecured. Tranches 3 to 7 are Jamaican dollar unsecured. Tranches 1 and 2, I'll focus on them first. So for tranche 1, the tenure is 2 years. For tranche 2, the tenure is 3 years. Tranche 1, the coupon rate and payment frequency is 7% per annum paid quarterly. Tranche 2, the coupon rate and payment frequency is 7.5% per annum paid quarterly. And the offer amount for each of these 2 tranches is $5.5 million, with the option to upsize to $8.5 million. Tranches 3 to 7, I'll go through them in order. So for tranche 3, the tenure is 2 years. For tranche 4, the tenure is 3 years. For tranche 5, the tenure is 5 years. For tranche 6, the tenure is 7 years. And for tranche 7, the tenure is 10 years. In terms of the coupon rate and payment frequency, for tranche 3, it's 9.75% per annum paid quarterly. For tranche 4, it's 10% per annum paid quarterly. For tranche 5, it's 10.5% per annum paid quarterly. For tranche 6, it's 10.75% per annum paid quarterly. And for tranche 7, it's 10.9% per annum paid quarterly. And for all the Jamaican dollar tranches, being tranches 3 to 7, the offer amount is $450 million, with the option to upsize to $700 million. Now, this, I think, gives investors quite a bit of options if it is that you want to invest long term. Tranche 7 is perfect for you. If you want to invest, I guess, more medium term, tranches 5 and 7 would probably be more up your street. And if you want to go short term, then the 2 or 3 year options are better suited. Principal repayment. So when will you get back your funds? So principal is repaid at maturity. So depending on the tranche that you purchase, the maturity changes. For tranches 1 and 2, for example, the tenure is 2 and 3 years respectively. So your maturity will be 2027 and 2028 respectively. Use of proceeds. So in a nutshell, we intend to use the majority of the funds to expand our capabilities to generate greater income, which I would say redounds to the benefit of the bondholders or the future bondholders. In terms of what that looks like on a specific basis, the first thing is that we will be using the funds to refinance existing debt. The second thing is fund strategic asset acquisition. Number 3 is support trading of securities. Number 4, strengthen our liquidity. And number 5, support investment banking deal execution. Of course, because we are raising these bonds, there are transaction-related fees and costs, which will also be settled from the proceeds. The opening date. So the opening date was March 28, 2025, and we intend to close on May 26, 2025. Actually, if we can close earlier, which we plan to, we will do so. Now, what are the investment risks and merits? This part is, I would say, important just to ensure that we put forward the fact that this is an investment and all investments have inherent risks. Now, we see two main risks associated with these bonds. The first is credit risk. Now, what I'll say is that credit risk is embedded in any bond that you would purchase, including this one. The important thing, however, is how do you manage credit risk? How do you mitigate it? Now, just to define what credit risk looks like, it's really the inability for us to, service the interest or coupon and or principal on these bonds. And how is that mitigated? It's mitigated by, I would say, the strength of the institution. So we went into great detail about the performance of Barita, the strength of capital of Barita. And the reason for that is because at any given point throughout the life or the tenure of these bonds, you the investor are relying on Barita's ability to continue growing and thereby continue servicing the debt or paying interest and paying principal. So the mitigating factor when it comes down to credit risk is the size of Barita, the performance of Barita, and the track record of Barita. And I'll go into that a bit more when I go into the investment merits. The second thing is economic risks, and it is closely tied to credit risk. Economic risk really just speaks to how we perform or a lack of potential performance in the event that there's an economic slowdown or an economic downturn. What I'll say here is that the mitigant is pretty much the same, but when it comes down to economic risk, it's important to highlight that we've been operating in periods of heightened economic uncertainty for quite some time. Justin touched on heightened inflation, heightened interest rates. These are economic environments that are difficult for securities dealers like Barita to operate in. Notwithstanding, we would have performed throughout these periods. We would have issued debt during these periods, and we have continued to pay interest and principal on those debts. Now let's talk about the merits. So we touched on these throughout the presentation. So at this point, we want to just cement them, right? So the first is strong equity base. So we've utilized a couple terms interchangeably. We've utilized the term equity. We've utilized the term capital. We've utilized the term permanent capital. In a nutshell, I would say they're all quite literally the same. What you're seeing on screen when I have here a strong equity base is how our permanent capital or equity or how our capital has evolved over the last few years between 2018 and 2024. It has grown at a compounded annual growth rate of 50% or 1,051% if you're just looking at regular growth, which is significant. Why is that significant? Well, Barita aims to raise $4 to $6 billion in debt. Now, how I think about total shareholders' equity is it absorbs shocks. Now, given our size in terms of equity at $35 billion, just for argument's sake, if there's a $6 billion shock, Barita has the equity base to absorb that. If we had tried to absorb that in 2018, it wouldn't have been possible. So the significant growth that we've seen in our business has positioned us to, I would say, better withstand shocks, which is important. The second thing is relatively low leverage, and this goes hand in hand with capital. The higher your capital, typically the lower your leverage. Now, what is leverage? Leverage is just a fancy term for debt. And think about your regular household. Less debt is typically better, in many ways. Peace of mind is one of them. Ability to ensure that you can continuously pay whatever interest, whatever bills you might have. It's the same for the business, right? So what you're seeing on screen here is basically saying that Barita's debt at 3.94x is less than the securities dealer industry, which is the industry in which we operate in, and this is also less than the commercial banking industry leverage. We should also point out that once we finish raising these funds, if we fully upsize to the $6.2 billion, then our leverage would increase to 4.11 times, which means that our debt would still be lower than the securities dealer industry and the commercial banking industry, which is of course positive for any investor. It means that we're still very lowly levered, or our debt is still very low, which is a positive. There are a couple of more investment merits, including strong investment banking pipeline. The reason for us putting this here is to highlight the fact that once it is that we raise these funds, they will be quickly deployed and ensure that we can generate additional income, which of course helps to service the debt, which is important to you as a bond investor. The fourth thing is strong management team. Terry touched on this. The performance of Barita is tied to the performance of the management team, right? We can't have good performance without a strong management team, and we will ensure that going forward, throughout the tenure of these bonds, the management team will remain sound. Number 5, publicly listed. Now, this is a point that I need to ensure that comes across quite clearly. Typically, corporate bonds locally and even regionally are not listed. Not listed means that there is no public exchange, there is no public market to buy and sell the bonds. So in the event that you purchase, you typically have to wait till maturity to get repaid, or you might have to reach out to your broker and say, please intervene and find me a buyer or a seller, depending on what you want to do. With these bonds, they will be publicly listed, which means that you will be able to sell them at a moment's notice on a public exchange or a public market, which is important because let's say you buy the 7-year tranche and you decide in year 5 that you want to do something different. You don't want to wait till the 7-year mark. Then you can exit early. You can get back your principal, or you can get a portion of your principal, right? So what this point offers you is flexibility, which is important. Number 6, demonstrated profitability growth. Now, we'll linger on this quite a lot throughout the presentation because it's important. So we've grown quite significantly over the last couple of years. In terms of revenue, we've grown revenue by 7.7 times. And in terms of profit, our net profit rather, we've grown that by 10.5 times. Why is this important? Well, you as a bond investor are a lender. And as a lender, you need to know that whomever you're lending to is growing. Right? And we've grown tremendously over the last couple of years. I would say we've grown during periods where economic uncertainty was heightened. Now, economic uncertainty will potentially be heightened over the next couple of years. We don't know. But what we do know is that we have a track record of performance. And you can invest in a track record of performance. And number 7, corporate credit rating. This is extremely important. Throughout this presentation, we've given you our viewpoint of Barita, utilizing publicly available information. We just kind of crafted it in a way that makes it easily, viewable to bring across points. But it's important that you understand that a corporate credit rating brings some independence to everything that we've been saying. Caracris goes through a lot of detail in assessing Barita, right? They look at many things. They look at risk management. They look at the governance structure. They look at our actual financial performance. They look at the team behind the company. All of this goes into their credit rating. They also provide an outlook. So they not just look at us as at the point in time that they did the assessment, but they also provide an outlook to say, whether or not they think that we'll do well over the ensuing years. So an A+ credit rating from Caracris really just signifies that to the extent that they would have done a good job at reviewing Barita, they think that we are a pretty sturdy company to invest in, which I think is positive. Now finally, how do you apply? So number 1, we'd like you to visit the Barita Boss website at www.baritaboss.com. Number 2, we'd love for you to download the prospectus. So please, once you go to the Barita Boss website, you are prompted to download the prospectus. Please read the prospectus thoroughly. And then finally, the prospectus, that Appendix 1, gives you a step-by-step guide on how to purchase the bonds on Barita Boss. So we've equipped you with the portal to apply, and we've equipped you with the details of how to apply. Now with that, I would love to open the floor for any questions that the audience might have today.
Thank you very much, Awa, for closing out our presentation, and to the rest of the team as well. I hope our audience has found the information very useful. And as promised, we'll now move into what is my favorite part of the presentation, which is where we get to engage directly with you and answer your questions. So for those of you that weren't with us at the beginning and joined throughout the presentation, you can submit your questions to me as the host, Kerry Bayliss, directly, and we will answer as many questions as we can. So I have seen a few questions come in so far. All right, so I'm going to start with a nice, easy one. How much to start investing in bonds? Therese, you want to take that?
Sure. All right. So for the Barita bond in particular, we wanted to ensure that it is attractive to everybody who is starting out on their investment journey, or wherever it is that you are in your investment journey, right? So, and that's a big part of what it is that we do at Barita. I can't stress it enough. We are very passionate about it. We are very passionate about democratizing wealth, right? What does that mean? It means that we want to ensure that we're making wealth accessible to everybody. So with that, we would have done our market reads. And what our market reads would have indicated is that a lot of people want to start investing, but they may not necessarily have a significant amount to invest. So we started out at a minimum of $500 on the US dollar tranches or the options that are available. And we also have $50,000 as a minimum on the Jamaican dollar side. Now, if it is that you do have more to invest, we're going to encourage you to invest more, right? Because the more you invest, the higher the return that you will get. So we want you to come in, have a conversation, or we'll come to you and we'll have the conversation with you. So whether it is that you are just starting out on your investment journey, you would have started out already, you would have invested in some stocks and you're looking to diversify your portfolio, the Barita bond is ideal for you because we do have several tranches, as Awa would have indicated. We have US dollar options and we have Jamaican dollar options, right? And we've made it very affordable for everybody to continue on their investment journey.
Thanks, Therese. Our next question is, who is the bond intended for and what kind of investors should consider it?
All right, I'll take the easy ones, right? So the bond is for everybody, right? Whether it is that you are starting out on your investment journey, you are continuing your investment journey, whether it is that you are a large institutional player, you're a pension fund, you're very savvy in terms of investing, wherever it is that you are on the spectrum of investing, the Barita bond is right for you, right? So if it is that you're looking for an opportunity for capital preservation, right, it is very important, for you to consider the bond, right? Because at the end of the day, you're going to be getting back your principal. So interest is going to be paid quarterly, right? And at maturity. So if you choose the 2-year or the 3-year on the US dollar side, or if it is that you choose the 2-year, the 3-year, the 5-year, the 7-year, or the 10-year on the Jamaican dollar side, whenever it is that it matures, you will be getting back your principal. But in addition to that, we wanted to make it accessible and easy, right? So that's why it is that we and Awa would have spoken to this. We listed it, or we're going to be listing it after we would have completed the offer period or subscription period. We're going to be listing the bonds on the Jamaica Stock Exchange. What does that mean? It means that, let's say, for example, you would have invested in the 5-year tranche or option, and something comes up, life happens, right? And we just have to be real about it, and we wanted to make sure, remember our mantra, to democratize wealth. So by listing the bonds on the stock exchange, you have the option to trade those bonds. So you can come out early, and then at the opportune time, you can reinvest in the bond at a later date, right? So it is applicable to anybody who is starting their investment journey, whether you are an individual or a corporate entity. I think it's very important that you look at your portfolio and not just focus on stocks, not just focus on a savings account. You have to think about your future, right? And it's very important for you to understand what are some of the goals you have for yourself and your family. Let's say, for example, you want to, invest towards your children's education. If it is that you're looking to acquire a home, a car, or any other large asset in your life, you can look at the bond and the Barita bond as a lucrative and an attractive investment option.
Yeah, and just to support you right there, right? And I don't know, Kerry, if this is one of the questions, but a lot of times they get the question, why is 7 tranches? Why is it's so confusing? Why so many? The main reason, as Therese said, they want to democratize wealth, right? We want to give every single person an option, right? And we believe that it's tenor spanning 2 to 10 years, currencies USD and GMD. We believe that there is at least one tenor there that is right for you, right? It depends on your goals, your risk tolerance. So talk to your advisor, your Barita advisor, and invest today.
Thank you, Justin. That's a great point. All right, so we have another question, a great question actually, asking if participants can invest in more than one tranche. So i.e., can you invest in both a JMD tranche and a USD tranche, or can you invest in, for example, a 2-year tranche and a 5-year tranche?
Yeah, so investors can invest in all the tranches if they wish to. So we have no limitations on the number of tranches you can invest in. So if you want to do 1, you can. If you want to do 2, you can. If you want to do all 7, you can. And I should also add that in some ways that is a strategy. So yes, investors have the option to invest in all the tranches if they wish to do so.
Thanks so much for that question. So we have quite a few coming in. The next one is asking, what are the proceeds of the bonds being used for?
Okay, so the bond proceeds will be utilized to, 1, refinance a small portion of debt. 2, we'll be improving the investment banking, helping the investment banking pipeline, so shoring up the investment banking pipeline. We'll also be using it for funding strategic asset acquisition, supporting trading of securities, and of course supporting our liquidity. So quite a few use of proceeds, and the general theme of the use of proceeds is to ensure that we're in a position to improve the profitability of the business, so that it redounds to the benefit of all the investors.
And just to add on real quick, in terms of the refinancing of debt, we get a lot of comments about this as well, right? It's less than 2%. If you do the math, 84.15 million Jamaican dollars of the total raise will be used to refinance some debt. So that's less than 2%. So the vast majority of the raise is going towards business expansion initiatives, which will allow Barita to, grow our wealth, grow your wealth, and also enable it to, honor its payments as the payments of the bond come due.
Thank you, Justin. So somebody is asking, now that the Barita bonds are out, what will that mean for dividend payments going forward for Barita?
So, dividends is usually a board decision, and the board always takes into account every single factor of the business, right? So while, we're raising the bonds and bonds have, payments that have to be made, dividends don't necessarily have to be made. So we'll always look at the business, look at the circumstance that the business is in, the environment that business is in, and make the right decision towards that. So bonds, strict payments, and in terms of dividends, the board will make the right decisions when they come due.
Yes, and to add to that question as well as it relates to the bond itself and dividend payments. So just to be very clear, the bond, you will earn interest on the bond, right? Just like a loan, you're going to be earning interest on the bond. And remember what we just spoke about, what are the use of proceeds, and that's very important for you to understand who it is that you're investing in and what is it that they're going to be using the money for. And in this case, we're using it for, putting it very broadly and summarizing all of the uses, apart from the 2% that is going to be used for refinancing. The majority of the funding is going towards expanding the business. So what does that mean for Barita? Barita is in turn going to grow the business, and typically translates into further growth in the business. And when there's further growth in the top line, once it is that we continue to be as efficient as possible and keeping those efficiency ratios in line with what we would have done historically, this will translate into the bottom line, which is the net profit. And remember that dividends is paid from net profit, right? So ultimately, a lot of individuals as well would have invested in Barita, not just for capital gains, but for dividends and dividends payments that would have been very consistent over the years. And if it is that we continue to, I would say, achieve our strategic imperatives and put the money that we are going to be raising to good use, this will ultimately augur well for all existing and future shareholders of Barita Investments Limited as it relates to the dividends that will be potentially earned from the revenue generation activities of Barita Investments Limited. So to try to answer that question as best as possible, we're growing the business, and we're growing the business for all of our stakeholders. We're growing the business for our shareholders as well. And when we do that, that will translate, and that is expected to translate into additional earnings for the business and ultimately translate into additional earnings for our investors.
I'll just add one more point. So we would have done a bond raise in 2023. It would have been our first bond raise as an entity. And since then, as I mentioned in the presentation, we've continued to service interest. So we've paid interest. We've paid principal, and we've also continued to pay dividends to our shareholders. Right? So, I mean, from that point of view, this is no different. We've continued to maintain those payments across the board, so we'll continue to do that.
Thank you, team. All right, our next question is in regards to withholding tax on the bond. It's actually a two-part question. So the first one is to clarify how tax is treated on the quarterly payments, and if there is a minimum coupon payment amount that will not attract a tax.
Okay, so for a typical local investor, the tax rate is 25% on coupons. So, I mean, just to break this down a bit, the coupon that we've indicated in the presentation is an annual coupon, right? So that annual coupon is basically broken down into 4. So it's split into 4 and paid 4 times for the year, every 3 months. And 25% of that coupon will be taxes. So you'll pay taxes, and that will be taken out prior to actually getting the net coupon every 3 months.
Thank you, Awa. All right, so I'm seeing a few questions related to security on the bonds. I'm going to try and just consolidate this into one question for all of our audience. Can you explain how safe is it to invest in the Barita bond? Looks like there's a fight for the mic on this one.
All right. So I think we touched on this throughout the presentation. So how we think about safety is what is the safety of the entity that is issuing the bond, and safety can be viewed, I would say, in a nutshell, from the financial strength of the issuing company. So the issuing company, just like I like to bring things home a bit, just like a household can be borrowing a lot, or not managing its finances well, or it can not be borrowing a lot, manages its finances extremely well. So we like to think of ourselves as a household that we don't borrow very much, which we showed throughout the presentation. Our debt is low compared to our industry, which is good. And we've managed our finances very well. So we've stayed profitable during, I would say, the worst of times for us as a securities dealer. And the worst of times would have been when the BOJ skyrocketed policy rates all the way to 7%, and it would have affected us. Notwithstanding, we would have been profitable. Now, I mention this because ultimately the safety of your investment is hinged on the safety of the institution. So we didn't want to just highlight that by just speaking about it. We wanted to get an independent perspective on it, which goes back to the CARCRIS rating. I should also mention that CARCRIS is not a Jamaican entity. It's a Trinidad entity. We would have reached out to them to do a deep dive analysis on Barita. Right? Deep dive means they get information that the general public typically would not see. Right? So they go into a lot of detail in terms of their analysis of Barita to then provide the public an independent viewpoint of the company. And they came out with an A+ credit rating. And an A+ credit rating, no matter where you go in the world, is extremely good. Right? So from that point of view, we believe that this investment is extremely safe. We are stewards of your capital. I mean, from the perspective of what persons would typically know of us, we've been to the market for equity raises quite a bit in the past. I would say in general, we have returned quite a bit to investors. But I mean, on the bond side, it's more important to just highlight the fact that your investment is stable, right? Your investment is stable. It will continuously be stable. And as Barita continues to perform, your investment will perform. I should also highlight one more thing. I mean, if you think about numbers, and you think about size, and you think about scale, the size of this bond is $4 billion. And we have the option to upsize to $6 billion. Barita has a capital base of $35 billion. And we have a total asset base of $140 billion. In a nutshell, what I'm saying here is that the size of this bond is minuscule relative to the size of Barita. Just to say that we're in a position in terms of our assets and our capital to service this quite easily and to repay it as it becomes due. So I would not worry as an investor in these bonds.
Just to add on to that a little bit as well. One thing that our mentioned a lot, but one thing he didn't is the capital adequacy or ratio of the business. Teresa that spoke on this earlier in her presentation. She said, if there's one thing that you need to learn before moving on from this presentation, is the capital adequacy ratios when looking at different financial companies, right? So our capital adequacy ratio, capital to risk weighted assets, as we said before, well above the regulatory minimum, and well, it's above our peers, right? So what this is showing you just, one, our leverage is good in terms of our position, our capital adequacy is good, corporate governance structure is good, risk management is good. I really don't see any major flaws with Barita in terms of the bond or anything like that. So I think all of those terms, all those items mixed together will give investors confidence in investing in Barita and the Barita bonds.
Thank you, Justin. I think this is now prime time for a simple yet very important question. How can you invest with us?
Okay, so there are many ways for you to invest in the Barita bond. So one of the first ways you can is to log on to www.barita.com/bond. There you'll find all the details in relation to the offer. You'll also find the prospectus, right? And you're going to hear us, you heard us talking about it, that it's very important before you make any investment decision for you to educate yourself. And one way to educate yourself is to review the prospectus. Now, in addition to that, you can feel free to come in to any one of our Barita branches, call us, we'll come to you, right? And we'll sit down and we'll explain the offer to you, and that's another way that you can do it. And we will help you and walk you through the application process. Now, in addition to that, we do have some support from the market, right? And typically, as brokers, we don't normally do this on our own. And it is very important, and we thank the brokers that would have come on board to support us. So we do have some selling agents who would have participated, who are actually participating and helping us to get the word. They're essentially tentacles of Barita Investments Limited and spreading the word to their clients and the general public about the offer. So we have FHC on board, we have GMMB on board, we have JN Bank, we have Proven, we have Scotia Investments, and we also have VM Wealth as well as a broker, right? So we have all of those brokers. And in addition to that, you can feel free to go out to any one of the securities dealers out there. They will process your applications on your behalf, right? This is a public offer that is open to everybody and anybody who wants to participate. Once it is that you would have gone through and you understand the investment that you're making, that's how it is that you can participate. In addition to that, we want to have and develop the relationship with you, because guess what? We have a lot of things in store from Barita Investments Limited. We have a significant amount of products and services outside of the Barita bond that we're talking about here today, and we want to give you an opportunity to participate and begin or continue your wealth building journey, right? And we want to take you along with that journey. So we're encouraging you to reach out to us. Don't feel ashamed that you don't know anything about investing. That's why we're here. That's why we're here to help you, to guide you. And that's why we're having this conversation with you here today, to make sure that you understand exactly who it is that you're investing in.
Very well said, Therese. If I could just remind the audience that to participate, you can visit barita.com/bond. And also, if you want to find us, how do you find us? Please feel free to visit any one of our branches. We're located in the New Kingston area, in Mandeville and Montego Bay. You can also find our contact numbers online if you wish to call into the branch. And if you would like an email address, asking everybody to write this down, you can reach us at questions@barita.com. Send any query that you have. How do I invest? How do I get started? And one of our advisors will respond to you. So thanks for that question. All right, excuse me. Let me just get back to the list up. They've been coming in still heavy, both from YouTube and Zoom. So thank you so much to the audience. All right, our next question I think is an important one. Asking, in light of uncertainty in international markets, is it a safe time for investments? Teresa, I'll ask you to take that one.
Okay, sure. I'll take that one. No, it's very important that investors, get the truth about the market in which we're operating in, right? And there have been tariffs, there have been pauses on tariffs, things like that, and that really and truly impacts everybody, right? Locally and internationally. Now, the implications of the uncertainty in the market are dynamic, and they can impact everybody and all financial institutions. So for example, if it is that, in Jamaica the 10% tariff is imposed, then that may impact our imports, for example. In addition to that, and imports going to cost more, therefore, when it costs us more, therefore, it's going to impact the businesses and it's going to impact their ability to earn, right? That's something that is very important that, we want people to understand. In addition to that, it may also impact the manufacturing environment, for businesses who do manufacture. It may also impact those businesses as well, because it's going to impact the cost of imports. But that's not the only thing, and we mustn't always focus on the negatives. We should also focus on the positives. Now, the positives of this is that it really and truly broadens or gives us an opportunity to help to develop other relationships and allow our governments to develop other relationships with other counterparts in other jurisdictions, right? In addition to that, with the tariffs not being the same across the board, so for example, some people are at 36%, some are at 10%, that also impacts us from our own exports. So for example, when you look on mining, or aluminum, things like that, which we do sell, it really gives us an opportunity, and it's for us to take a deep dive to determine how can we be more competitive than that of our European partners, right? So that could also present an opportunity for us. Now, there are always going to be uncertainties in the market, right? And it is very important for us to understand that irrespective of the uncertainties in the market, businesses will continue, right? We all want to grow and survive. And that is something that we all need to understand that, yes, there are going to be uncertainties, but we as financial institutions, we're going to, as best as possible, try to mitigate them. We're going to be supporting our businesses out there. The tourism industry, the remittance industries that could also be impacted by, the lack of discretionary income from, that may come from the US and, them coming here. We're going to solve for that. We're going to find ways and means to continue our business, and we're not going to just sit down on our hands and do nothing. So it's very important that, yes, there are uncertainties. There have always been uncertainties in business, and at the end of the day, we have always been able to thrive and survive, and we expect no difference, right? So what does that mean for you, the investor, at this point in time? We are encouraging you to diversify your portfolio, and one of the best ways to diversify your portfolio is through the Barita bond, right? And we said before, right now in uncertain times, you want to ensure that you're focusing on capital preservation, right? Anything can play. And if it is that you're going to be investing in an instrument that provides capital preservation, you can invest in a bond. And why not invest in the Barita bond? Because it's going to be listed. So if it is that, any unforeseen circumstances happen to you and your family or your business, you have the option to liquidate through the Jamaica Stock Exchange, right? But what we're saying, uncertainties have existed from the dawn of time until now. But we as Jamaicans, we're very resilient. And even if we're not Jamaicans, people in general, we're not just going to sit down and do nothing. We're going to solve for it, and businesses will continue.
Thanks, Therese. So I've just seen two great questions come in. The first one is asking if participants can buy the bonds online. Justin, you want to take that one?
Yeah, sure. So yes, they can purchase the bonds online or apply for the bonds online. You go to baritaboss.com, or you have other selling agents. You have JMB's Moneyline, you have VM's online platform. So there's a lot of different ways. There's a lot of different ways that you can apply for the bonds. But visit baritaboss.com, download our prospectus, and apply today.
Thanks, Justin. So just a reminder, the email address the website that we've been consistently mentioning, barita.com/bond. You can apply directly via that link as well. The next question is asking, are rates fixed through to the maturity of the bond?
So yes, the rates are fixed throughout the rates of the bond. So I went through the different terms again, just in case you missed it. So tranche 1 and 2, those are the US dollar bonds. So tranche 1 is at 7%, tranche 2 at 7.5%, and the Jamaican dollar bonds, tranche 3 to 7, tranche 3 9.75, tranche 4 10%, tranche 5 10.5, tranche 6 10.75, and tranche 7 10.9, fixed throughout the life of the bond.
Thanks, Justin. Ladies and gentlemen, we are really appreciating the engagement tonight. It has been fantastic so far. All right, I think we definitely have time for one or two additional questions. The next one is asking about the bond being listed on the Jamaica Stock Exchange, and what does that mean for bondholders?
Yeah, so what does that mean for bondholders? It means that bondholders have greater flexibility. That's how I would phrase it. So what does that look like? It means if you purchase a 2-year bond, and you, for example, in 6 months have a family-related matter, or you want to travel, or you just want back your funds, you can go onto the Jamaica Stock Exchange and sell the bonds. Right? It means you can get back your principal earlier than the 2-year mark. Same goes for if you were to buy the 5-year bond, the 7-year bond, the 3-year bond, the 10-year bond. It gives you flexibility to sell or buy and get back your funds or get more bonds. And this is important, right? Typically, corporate bonds are not listed. So it means that if you want to sell, you have to reach out to your broker, and your broker has to set up some arrangement to allow you to sell. In this case, in the case of the Barita bond, that's not so. Once it is listed, you have the flexibility, you have the option, you have the convenience to sell at any time or to buy more bonds, which is important.
Thank you, Awa. All right, so just a question asking that our selling agents sell all tranches of the bond offer.
Yes. So the selling agents are selling all 7 tranches of the bond. So whether it is you're with JMMB, you're with Scotia, you're with VM, you're with FHC, you can sell the bonds, right? And that includes their platforms. So you can go onto their platforms and you can apply for the bonds. So Jane's platform is accessible, VM's platform is accessible, and JMMB's platform is accessible to purchase the bonds, and you can purchase any one of the 7 tranches.
Thanks for that clarification, Awa. All right, so I know that persons have been joining us at different times, so you may not have gotten all of the presentation or all of the questions. So I am going to ask this question for the benefit of all who have joined late, which is, can you just explain the benefits of the bond and why should people invest?
Okay. All right. So some of the benefits of the bond and, why you should invest. The benefits of the bond, you're getting flexibility. I will just said it. You're investing in a strong company, right? The financial performance of Barita Investments Limited over the years has spoken for itself, right? And this is not just coming from us. This is coming from an independent credit rating agency. So similar to Moody's or Fitch or S&P, right? We have our own regional credit rating agency that would have come in and done their assessment, and they would have given us an investment grade rating, right? So you're investing in a strong, sound financial institution that has robust capital adequacy, that is lowly levered, that has an experienced management team, that also has strong governance frameworks in place and risk management frameworks in place to support the business. And in addition to that, you are getting an excellent opportunity to participate in an attractive investment opportunity, right? Attractive rates, very attractive rates right now. Justin would have spoken to those rates. And in addition to that, you're getting the flexibility of investing in both US and Jamaican currency. So it really doesn't get better than that, right? You are investing in your homegrown institution, Barita Investments Limited. You're investing in a strong entity, an investment grade rated entity, rated by CARICRIS. We have a strong management team, strong governance, strong risk management framework. And remember, we spoke about this earlier. When you look at an entity, you're going to look at the capital adequacy ratios. And those for Barita Investments Limited speak for themselves. So we're encouraging you, come out, ask the questions, come and meet with us, and we will provide you with all of the answers and guide you through the process to ensure that you get on this investment opportunity and continue to grow your wealth through this investment opportunity.
Thanks so much, Therese. So one additional question came in again about the taxes on the bonds. So just to confirm, yes, the bonds are tax deductible and the tax is deducted at source. All right, ladies and gentlemen, we have now come to the end of the Barita Town Hall. We hope that you found the information helpful. I'd really like to thank my presenters and my colleagues for taking the time to share all of the information with us in such a way that we can really understand what a bond is and the benefits to all investors who are watching. So we would like to take the time again to thank you, not just for spending your evening with us, but for all of the incredible questions. I think collectively they've helped everybody on the line to understand why this is such a great investment opportunity for any investor at any point in time. in your portfolio. So just a final reminder that if you are interested in participating in the bond, you can contact your Barita advisor. You can visit us at any one of our branches. You can visit us online via our website, barita.com/bond. I'll say it one more time. That's barita.com/bond. You can visit one of our selling agents. You can also email us directly at questions@barita.com. So we are very easy to find. We want to hear from you. We want to be able to assist you in your participation. So last but not least, I would just again like to say on behalf of our team, thank you so much. We look forward to your participation in the bond. We're going to wish you a great good night, and we're wishing you more health and more wealth. Thank you for joining us. Have a good night.
Being a true game changer is not just about playing the game.